What's going on, guys? Today we're going to be going over the Terra ecosystem. I want to take a look at 4 different tokens that really are the crux of this project. So US Terra, it is a stable coin that allows you to move throughout the ecosystem. You put your US Terra in the Anchor protocol, which allows you to borrow a UST, which then allows you to go into the Mirror protocol or application. Mirror allows you to buy derivatives, which are basically pegged versions of U.S. stocks, commodities, things along those lines. So you can buy gold, you can buy S&P 500, you name it. And then Luna is the token that keeps US Terra stabilized. So when you mint US Terra, you burn Luna to offset it. You burn $1 of Luna. It's a really cool ecosystem to keep everything pegged at $1 to make sure you're not losing value as you're moving throughout the ecosystem. So we'll get into that now. I really like Terra for their savings account, basically is what I call it. So instead of leaving it in a bank, you can now move over money that you have sitting, not making you any money, right? You can move it over to what is called Anchor. This is the dopest thing I've ever seen personally because they all work together in one ecosystem. It's not like each project is separate. Like one developer was working by himself and the others were doing this. No, they're like all meshed together, which is so cool to me because here we are, right? So I have, $1,300 put in to my Anchor in the value of UST, which stands for a US Terra. Okay, so Terra is a token that they made and they basically pegged it to right at $1. It's usually like 95 cents, 97. It'll fluctuate here and there, but it's about at $1 every time. The reason why it's really, really cool is because once you put it in here, right, you can automatically deposit and it'll sit. Once you have deposit, it'll sit in here and it will earn you. I put this on my last video. It'll earn you 19.27% a year. And it goes up and down, but it stays around 21%. And it tells you down here yearly how much you're projected to make. This is just off of $1,300. You can exponentially grow that if you have 10, 20, 50K sitting in a savings account, which a lot of people do. Move it over. Move it over to here and start getting some real gains. It tells you how much you'll make a month, how much you make a week, how much you make a day. And it's pretty crazy because if you just kind of sit here and watch it, I mean, this right here, this third number, yeah, it's a portion of a cent. But I promise you, you hit refresh or you wait a couple minutes, next thing you know, it's going to continue to go up. And the reason why is because Anchor is a auto compounding platform. So it automatically compounds what has been added from your reward. So when you're earning that 19%, as soon as the next 0.001% hits, it is now added into the total and is compounding on top of it. So it's a really cool platform. I'm waiting for this to go up, like I said, because it's usually, any time from like 20 to 30 seconds seems like it pops up. But I want to show you one more thing while we wait for that to happen. I'll pull up Mirror real quick. All right. So what Mirror is another connection on the Terra ecosystem that allows you to borrow from your already deposited UST. The reason why this is so beneficial is because now your money is like in a savings account, secured, won't fluctuate, right? And then you get to come over on Mirror and you actually get to borrow from that. Someone was like, well, how does that even work, right? You can borrow from your savings account and not actually touch it. It's crazy. So you go over here and let's say you want to do, we can take, and it's anything they have in here. They have, S&P 500. They got stocks. This is like a derivative marketplace. So, you can get literally, QQQ, Microsoft. It goes to S&P 500 right there. Apple, like you name it, right? If I click one of these, let's say I want to do S&P 500, right? Some people, and this is what I was talking about. These projects are so immersive. It doesn't even make sense. Sometimes it blows my mind. Somebody reimagined the stock market, right? Let me move this up real quick. All right. So what it's telling you right now is an oracle is just like an off-chain regulator that allows you to stay pegged on chain with different fluctuating values and things. So whether you're adding data, whether it's the price of a stock, whatever it is, they can take things that are in the real world, peg it to something that they call an oracle, and we can pull that data. These decentralized apps can pull the data, and now you can stay pegged. So as soon as S&P 500 fluctuates or moves, then it is reflected right here ASAP, and it's pretty cool. So here you are, trying to decide what you want to buy, and let's say you want to buy S&P 500, right? S&P 500 will literally allow you to you can purchase with that amount of money. Now, the crazy part about this is you get to decide what you want to pay with. Now, you can either pay with US Terra, or you can pay with AUST, which is the value that you're borrowing in order to pay, which I'll explain that in a second. Let's go to borrow real quick. So this is where it gets kind of crazy, right? So let's say we're just going to use Microsoft as the first one up there, right? I get to select what I want to use. I can either use AUST, right, which I have in my wallet. It'll tell you what you have in your wallet. That little blue thing is telling you what you have in your wallet. So I don't have any of these other tokens, right? I only have $5.70 of US Terra, and then AUS Terra, which is set in my anchor. I can borrow a loan to value percentage. So it's not the entire amount, but I can borrow close to it, $1,200 off of it. And I can select this. Now I can borrow that to buy my Microsoft. And it'll tell you how much based off of the collateral ratio you want to have. So let's say I want to, only spend $1,000 worth of my AUST. I can now select, how much do I want to risk the ratio? The more I come closer to my liquidation, if it hits under 150%, it'll liquidate me. So it'll basically sell my AUST, what I have in my savings, for the value of what I have bought, Microsoft, which is not something you want to do. You just basically, you lost your Microsoft and you have lost your money. Not a good idea. It's basically like getting foreclosed on your house. So here you go. The closer you get to here, you see how I can buy more Microsoft. Well, that's the risk you're willing to play. I would much rather, stay in their safe range and be at 200 or higher. And it tells you how much you can get. So you can get about 2 Microsoft shares of Microsoft with that. Now, once you own this, it fluctuates at the same value that Microsoft does in real time. So when the stock market closes, it won't allow you to sell, move, exchange, do anything like that, which I wish it was 24 hours and we get away with something like that. But unfortunately, it's not. So long story short, you have now recognized that you can take your money already sitting in a bank account, put it in, a US stable coin. So a US dollar coin, a US tether, DAI, whatever it may be, send it over across to your MetaMask or your Terra wallet, whatever it may be. And once you're there, you can now set it in a savings protocol that is making you 20% a year. There we go. So it jumped 2 cents while we're sitting there. So it's legitimate. It works. The more money you put in, the more interest you earn. Like I've seen it while I watch. It makes somewhere around 70 cents a day, which seems about accurate from what I have put in there. To me, $260, this is what it says, $250 in a year for not really doing anything, and I can still borrow off of it and invest in things like S&P 500 that I know are guaranteed to go up. My thing is I just don't believe in the US dollar. So when someone will say, well, how can you buy a stock if you don't believe in the US dollar? Well, the thing is, we know they're going to keep printing money. So if I get into a stock and I know they're printing money, it's inevitable that it's going to keep rising, right? But I'm also getting 20%. So I'm getting 8 to 10% off of S&P 500 every year, and I'm getting 20% here. I'm guaranteeing myself 30%. This is the safest play possible you can do. Guarantee yourself some income coming in here. It is like a no-brainer to me. The long-term play is you do something in real time. Oh, there you go. You do something in real time. It just jumped up for some reason. I don't know what happened there, that percentage. But you do something in real time out in the real world. You're making some money. And then you now put it in this protocol and it's going to start earning. It's earning. And the benefit is that when you keep earning over and over and over, you now can take that money out and utilize it to buy more real world things, such as real estate, to create more passive income, which ultimately is what we're all looking for. So if you found this video helpful, please like and share this with a friend. This channel is dedicated to explaining how to grow your wealth exponentially by better understanding our current financial systems.